All right, today we're going to dive deep into a company called Confluent. If you're a potential investor, this is for you. We're going to look at how they make money, the argument for its massive growth, and of course, the risks you absolutely need to know about. And the best part? This is all coming directly from the company's own filings. So what's the big idea here? Well, it really starts with their vision.
So right off the bat, they hit you with this huge idea, becoming the central nervous system for modern businesses. Now listen, you've got to pay attention to that phrase. It's not just some slick marketing line. It's really the key to understanding their entire game plan, their product, and why they think their market is so enormous. It's all about putting data into constant, real-time motion.
Okay, so what does a central nervous system actually do? Well, it sets data in motion. The best way to get your head around this is to think about a library versus your body's own nervous system. A classic database, that's the library. It stores information perfectly, but that data is just sitting there, it's at rest. Data in motion is the nervous system. It's that constant live flow of information connecting every single part of the business in real time. And Confluent argues this isn't just an improvement, it's a whole new category of technology.
All right, so that's the grand vision. It sounds pretty revolutionary, right? But a big idea doesn't automatically make for a great business. So the real question is, how do they actually turn this concept into dollars and cents?
Well, the business model itself is actually incredibly simple and focused. I mean, just look at this. A whopping 96% of their revenue comes from one thing, recurring subscriptions. That tiny little 4% sliver left over, that's just for things like consulting. For an investor, this is exactly what you want to see. It's that classic, high-margin, software as a service or SaaS playbook. So that subscription money comes from two main offerings. On one hand, you have the Confluent platform. This is kind of the original do-it-yourself version for companies that want to manage everything on their own servers. But the real star of the show, the thing everyone is watching, is Confluent Cloud. This is their fully managed service, and it is, without a doubt, their primary growth engine. It is absolutely key to the future of the company. And that focus on the cloud leads us right into the bull case. So why are some investors so excited about this company? Well, it really boils down to a few key numbers that paint a picture of a business that's expanding fast with a product that customers just can't seem to get enough of. First, let's just look at the top line. In 2024, subscription revenue hit $922 million. So we're talking nearly $1 billion. But here's the kicker. It's not just the size, it's the speed. That number is up 26% from the year before. For a company of this scale, that is some serious momentum and a powerful signal of demand.
But the story gets even more interesting when you zoom in on just Confluent Cloud, their big strategic bet. Its revenue is growing at a blistering 41% year over year. I mean, that's just crushing the growth of the rest of the business. It shows that their big push into a managed cloud service isn't just working, it's quickly becoming the main event for the entire company.
Now this next number, this might be the most important metric of them all for a software investor, 117%. That's their dollar-based net retention rate. What that means, in simple terms, is if you take the exact same customers from last year and don't add any new ones, they are spending 17% more this year. That is huge. It means customers aren't leaving. In fact, they're digging in deeper and betting Confluent into everything they do. That's the sign of a really sticky, really valuable product.
So how do they plan to keep this engine revving? Well, their game plan is pretty clear. They're leaning into a consumption-based model, which means as their customers grow, Confluent grows. Makes sense. They're also pushing hard internationally. That's already 40% of their revenue, so there's a big runway there. And they're not standing still. They're adding new tools for things like data governance and trying to become a core piece of the next big tech wave, which of course is generative AI.
Okay, that all sounds pretty great, right? That's the optimistic view. But as any smart investor knows, you have to look at the other side of the coin. So now we need to talk about the bear case, the headwinds and challenges that Confluent itself calls out in its own filings.
And that's really the key here. This isn't us speculating. These are the risks that the company is telling everyone to watch out for. You could say this is what keeps their own management team up at night.
It really boils down to three main areas. First, financials. Despite all that growth, Confluent is not profitable. In 2024, it posted a net loss of $345 million. Second, there's execution risk. Their success hinges on customers spending more over time, but that can get tricky in a tough economy where IT budgets are the first thing to get squeezed. And third, and this one is a big one, market risk. They face ferocious competition. On one side, you have the giants, Amazon, Google, Microsoft. On the other, you have a free open-source alternative called Apache Kafka. And here's the twist. The founders of Confluent are the very same people who created Kafka in the first place. So they literally built the free competition, and now their entire company is built on convincing you to pay for their premium version. That's a fascinating and challenging position to be in.
So this brings us right to the heart of the matter for any investor. You've got this classic showdown, a massive, game-changing opportunity on one side and some very, very real risks on the other. Let's just put them head to head.
It really all comes down to this. The bulls will point to a company that's pioneering a brand new strategic tech category. They'll look at that insane 41% cloud growth and that 117% customer retention and say, this is the ground floor of something huge. But the bears, they're going to point to hundreds of millions in losses. They'll point to competition from the biggest companies on the planet and an unshaky economy, and they'll say the path to actually making money here is long and far from certain.
And so, we're left with the fundamental question you have to answer. Is Confluent building an essential, indispensable piece of the future, that true central nervous system for every business? Or is it a high-growth, cash-burning company on a very uncertain road, getting squeezed by powerful rivals and a tough market? That, right there, is the dilemma at the very heart of Confluent.